And by the age of 12, it's like that awkward age where you move there. I am in grade 7, and then the next year you go to high school. So it wasn't the smoothest transition. Trying to learn English, trying to make friends at the same time. It doesn't it's not the easiest thing to do. So it was tough. It was tough the first couple of years in Canada.
Did you have any particular favorite subjects that you like to dive into when you're in high school, or were you just struggling to kind of just adapt to the culture and learn the language?
I was always really good with arts. Like, I'm a really creative person. So that's kind of where I used to escape. I would like hide in the arts room at lunch because no one would eat lunch with me, and I didn't know who to hang out with. So I'll hide in the arts room. That's kind of like my safe place. That's kind of why I eventually went to art school, went to film after high school. I'm always kind of very introverted, to be honest. So that's kind of my escape. To be frank, my escape to not have to, worry about meeting people or talking to people in English. Yeah.
Yeah. So early on, when you were in high school and in college, did your family or friends were they into like investing or trading?
No. I didn't know anything about the stock market until after college. Early on, no one in my family, no one in my friends group knew anything about the stock market. My parents didn't have the extra money to think about the stock market or investing.
So what did you major in university?
I was in film. So I studied 3D animation in film, very different from what I'm doing now. But that's why I got started with like all the videos and all that fun stuff.
Were you like an editor of film and special effects? Is that it?
Well, in the modern day movies, like a lot of Hollywood blockbusters, you see a lot of like 3D effects, right? It's all green screen. For example, any Marvel movie, the backgrounds, the vehicles, the monsters, the heroes, all of that is green screened. So I'll be the people who design what the costumes look like, what the environment looks like, what the spaceships look like. Everything will be in 3D. So that's kind of my former career in VFX. We call it VFX artists or designers.
What did you like and dislike about your job?
At first, I liked it for the creativity. At first, it was really cool because you're essentially working on film sets. You get to see like the next room, they'll be filming some shots in front of the green screen, and then you'll be editing and kind of planning out with the 3D effects in the next room and building out the environments in 3D. So I had a really, really technical background using all the different softwares, lighting, texturing, to create these like computer generated images, CGI. That's the part I enjoyed. To be able to work so closely with a film set, and it's a big production. So you get to work with directors, sometimes actors, actresses, of course. That's the part I enjoyed at first. But what I don't like is the long hours, because film productions are very, very hectic. Sometimes you work 6 days a week from 9 to 9. It's not the best condition because in order to work on these CGI sets, the green screens, you have to work in really dark rooms. You don't get any natural light, and the hours are brutal. So you'll work like this for 2-3 months, and then the contract will end, and you're on your own to look for the next contract. So it's not really stable, and it's not a healthy environment long term.
Yeah, it sounds like you weren't getting much sunlight.
No, well, I still don't, but yeah.
While you were working there, did you start saving and or investing? Did you do anything like that?
Yeah, so it's because my job wasn't that stable. So during the weeks or months of break in between work, in between the contract, that's where I started looking at other ways to supplement my income. I was living in Los Angeles at the time, and rent was really expensive and still is. But I need to find ways to make some income to be able to pay rent. So that's where I kind of stumbled upon day trading, swing trading, and the stock market as a way to try to make some money to make sure, like I have something coming in between jobs.
Did you get into trading before actually any investing, or did you get into investing before trading?
At the time, I didn't really understand the difference, to be honest.
Mm-hmm.
So, yeah, I remember back then, it was when Robinhood, the trading app, was in like the beta version. So I got one of those like priority invitation codes from my friends. So I started buying stocks in and out on my little Robinhood account on my phone. And I thought that was investing. So I was like buying Apple today and then selling it next week. But in hindsight, I was swing trading at the time. But I thought that was the same as investing. But that's kind of like the gateway for me to, seeing what the stock market is like and trying to make like a little bit of money here and there.
So when did you open up your first trading account?
The Robinhood app was, I think, 2013, end of 2013. That's when they had the beta version. And then a real trading account where I opened up was with Interactive Brokers was 2014.
Mm-hmm.
Mm-hmm.
So were you enticed by any grandiose claims by these promoters on the internet? Did you, and how did you educate yourself?
I joined a bunch of chat rooms, the ones that give you alerts to buy and sell, because I thought I would be able to make money really quickly. So that's what I joined. And, a factor was all my friends were going to EDC, Las Vegas one summer. So I really want to go to VIP with them. So that's where I was, okay, like I've been saving up, some small amounts of money here and there. Let me kind of place a little bit more trades to see if I can make enough to buy a VIP ticket with my trading. And with all the chat room alerts I was following, I'll make a small amount of money here and there. But when I lose, I'll wipe everything out. At first it was really rocky for sure. And I lost a lot of money with my first few accounts on my Interactive Brokers.
So you ended up blowing up accounts, or did you just slowly drain your account over time?
Oh, I blew up.
Oh,
I blew up. Yeah. The first account, I think I blew up after 2 weeks. It was like a $2,000 account. And then that's when I realized, oh my God, that's $2,000 I just lost. And it took me a long time to save it. So I realized I was pretty reckless really quick. So when I refunded the account, I toned it down a lot.
Mm-hmm. So what were you trading early on? Like any particular type of stocks or strategies, or were you just simply buying whatever the chat room told you to buy?
I was buying whatever the chat room told me to buy. And then it were like these like penny stocks. Mm-hmm. And then a lot of the $1, $2 stocks at the time, like super small cap, sometimes really low float. That's kind of my introduction to the stock market. I'm sure there were a lot of pump and dumps, but I didn't know that. Everything was so random back then. I didn't understand why a stock will go up when, the chat rooms say to buy at $2 or go up right away. And when I bought it, it was down at 150. I didn't understand why. So that was a lot of trial and error in my first year for sure.
Did you feel that you were part of a community in this chat room? Did you have any mentors? How did you feel at that time being connected to the trading world?
No, there's usually these kind of chat rooms. There's no such thing as anyone teaching you or mentoring you, because the whole point is it's supposed to be easy, right? The whole point is you're supposed to just follow and buy whatever they buy and sell when they sell, and that's it. That's supposed to be the amount of effort needed. So I didn't feel any sense of, I was learning. At least in my first 6 months, I didn't realize that, I need to like put work into this. Yeah.
Did you share with your family or friends that you started trading?
A little bit at first, but then I stopped because everyone just said I was gambling. And in hindsight, I was with the alerts. That was totally gambling. But I kind of stopped sharing and I kept it to myself because I just didn't want other people saying, oh, I shouldn't do this or shouldn't do that. Like, I'm just gambling. It's especially later on when I started to take it more seriously, I just didn't want the negativity to kind of hold me back.
Right. Did your family or friends notice any change in your personality when you took some of these big losses?
I'm sure my family did because I used to have some anger issues, and I kind of would take it out on them, unfortunately, regrettably. Yeah, so I'm sure they know.
Mm-hmm.
Yeah, and I'm not proud of it. Yeah, I used to take
Oh.
it out on them, yell at them, and then I had some, keyboards that I used to smash my keyboards around, and mouses as well. And I
Uh-huh.
later realized maybe I shouldn't do that. It's kind of getting expensive.
Yeah,
Yeah.
right. So do you think trading can bring us closer to our repressed emotions?
I think trading reveals whatever you already have inside. I
Hmm.
think, if a trader already was struggling with some sort of um any relationship issues in life, or if you were before trading, if you were already financially stressed, I think trading will bring all of that out,
Hmm.
unfortunately. And if you have any sort of like insecurity, and that's okay, but trading will bring it out to you. I didn't think I was an angry person before until I started trading. Yeah.
Yeah, you mentioned in one of your videos that
Mhm.
anger is a secondary emotion and
Yeah.
it's there to protect us.
Yeah.
Care to elaborate on that?
Yeah. So I think it's kind of like well, I'm no psychologist, but in my opinion, it's kind of like our own inner reflection of, like, it's our instinct to kind of lash out whenever we feel like we're vulnerable. So let's say if I take a big loss, that's a huge hit to my ego. So to react to that, to kind of protect myself, I have to like lash out at the others and kind of express and yell and at other people to kind of react to that emotion, because to those losses. Because if I don't, then that means, I have to take responsibility for myself. And most people don't want to do that. They don't believe that when they lose money in trading, it's their own fault. I used to blame it on the markets, blame it on the market makers. All the slippage is the market makers. It's not my fault. No, at the end of the day, it's just me not following the stops.
Hmm.
So I think I come to terms with that. I'm a lot better now. I don't really yell or smash my mouses or keyboards anymore. So I kind of dealt with this over the last couple of years. I take a lot more responsibility for my own losses now. Unfortunately, every trader has to go through this.
You suffered some losses. You said you blew up one account with $2,000. After that, how did things go? Did you end up having any major losses after that? Enough to make you seriously consider quitting?
Yeah. So after that first account, I still lost a couple more accounts, but it's not major blow ups. It's just slow bleed of like small losses here and there. So I probably lost another $2,000 accounts, but no major blow ups after the first one. The biggest blow up that happened was actually after I became profitable, because that's when kind of I've been slowly build up my account size. I was getting ready. This is in at the end of year two. I was actually a lot more consistent. I found two strategies I would just play in and out. I was getting ready to kind of size up more and take it to the next level and eventually be able to quit my job to do this. But that's when I had a really, really big blow up, because I think, once you become profitable, you see how far you've come. A lot of traders, they become cocky, and I was definitely one of those people.
So, did
Yeah.
you have a pretty long winning streak prior to this big blow up? And share with us a little bit about this blow up. Like, what trade did you do, and what happened?
It's kind of embarrassing because I was essentially bag holding. It was a day trade turned into a swing trade. So I was stuck upside down short on Snapchat for a long time. So it was after they IPO'd. I did a lot of fundamental research on all my day trades at the time, and I was trying to short it to single digits. And it went to single digits and bounced, and that's why I started adding in more and more. I didn't follow my stops, and that turned into a swing trade short. And then I just kept on adding more size. So when after I closed it out, I've been holding the position for almost 2 months. Essentially, it was a back holding position, and unfortunately, like that just broke all my rules. I was strictly a day trader. I didn't swing trade that much. I broke all my rules. I held a losing position, turned a day trade into a losing trade. I added to a loser. I was using, more than the amount of size I normally would take on a stock that's clearly uptrending on a daily chart. So yeah, when this is the biggest blow up for me at that time, this was around $47,000 over the course of almost 2 months. And that was really painful, not to say the least.
Oh, yeah. I bet.
Yeah.
Were you encouraged or enticed to stay in the trade because you were looking at perhaps some company fundamentals and looked at, my God, look at how overvalued this company is, or they're not making much money? Did you follow fundamentals at all in this particular company?
So for day trading, usually, yes, every day I do some really quick fundamental analysis. But for day trading, you don't need to do anything that in depth, generally speaking. So since we're holding this position for so short term, you just usually need to know, what the company does, overall, are they profitable or not? Any, if there's a small cap, any potential dilution, that's kind of the extent I do. But unfortunately, the thing with adding to losers and back holding is that the more money you've sunken into it, the more losses, unrealized loss you're holding, the more research you do.
Yes.
You find more and more things to justify back holding the stock.
Yes. Yep. Been there.
Yeah. So I would, yes, like you said, I would justify it with, Snapchat's not profitable. Come on. Like, this is like, this is something that only the teenagers use. They're not profitable. They're burning so much cash. There's no way this is going back to $20. So, I mean, those were just excuses, to be honest. I should have just stopped out because I was just breaking rules at the end of the day and didn't want to admit I was wrong and realize that loss.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So after that loss, did you consider seriously quitting? And if so, what made you come back?
In the course of the first 4 years of trading, even after I became trading full time, I considered quitting many times. And I quit many times, but there were 2 times that's very seriously I was gonna quit and just go back to my VFX job. And that was one of those situations where, okay, I'm done. And then I did go and look for another contract. That's another 4 weeks contract on another movie at a time. And yeah, I thought I was done with trading, and that was it. I go back to my regular film career and try to make it work.
I see. So you hadn't completely quit. You just were trading in between contracts. Is that accurate?
No, basically I just stopped taking contracts. So I was,
Oh, I see.
yeah. So I went back to my work, take up 2 contracts twice, with the intention of never going back to trading. But every time, I get that itch because we're on the West Coast. I go to work at 9. So technically I can wake up early every morning and study the market and trade. So even though when I wasn't trading, I was still waking up early to watch the markets. I just get really, really drawn to the market. Even though I was determined to quit, I was still waking up and watch the market every day.
Oh, wow. So,
Yeah.
So the market still fascinated you and kept you intrigued even while you were thinking about quitting.
Yeah. And even after I thought I quit, I was still watching the market. I think, going back to work, it was fine. I was getting paid again, but it's very hard to go back to your regular, for me, it was 9 to 7 or 9 to 9 job after you have had a taste of the freedom and the potential that trading can give you. It's very difficult. Mid 2019. So since then, since the 2016 blow up, that's been a couple of years, and I was, trading full time, a lot more consistent, a lot more less stupid losses, like a Snapchat one. Once in a while, I still slip today trading full time. I realized I needed something to distract myself. Ideally, a side project that's creative for me to focus on midday after I'm done trading. Because what happens is I used to trade so market opens my time at 6:30 on the West Coast. So I'll trade till about my local time, 9 or 10 o'clock. And then after that, I'm just throwing money back to the market. Mm-hmm. If I sit around and I stare at the market screens. So the YouTube channel is a way for me to be creative, have a side project, do something fun that I used to enjoy a lot when it wasn't work, and distract myself. In a way, the YouTube channel saved me so much money because I will shut down my computer, shut down my brokerage account, and focus on making these little videos that I really, really enjoy and find it fun on the side.
Do you think that your YouTube channel helped you in any way to hold yourself accountable for your own trading?
Yeah, for sure. I think if you have to talk about your trades, recap your trades, and talk about these really important ideas to other people, summarizing a video, it's kind of positive reinforcement where, okay, I just talked about risk management in a video. Then the next day, when I'm trading, about to do some stupid stuff, how can I do that when I just told 1,000 other people watching my videos that you should follow your stops? Right. So I think the YouTube channel, I'm glad it helped a lot of people, but really it's a way to help me stay very disciplined to my plans, my rules, and know when to call it a day and be done with trading.
I noticed that since you created your YouTube account, it looks like it was just about 2 months. You already had videos that would get well over 100,000 views. And now, after over 350 videos, a million subscribers and some videos getting over 1 million views when many other trading videos by other people only get a fraction of that, of the amount of views that you get. What do you think the appeal is?
Well, first of all, thank you. But I don't think I hit that much views that fast. Like it's a slow trajectory. Like it's something that I really, really like doing, and people see the work I put into. And editing and video creation came naturally to me thanks to my former career. But I think the biggest thing why people like my videos is because I don't sugarcoat it. And I usually talk about my experiences of why I had such big losses and why most people will have losses, and kind of what you should expect as a new trader going into trading. Kind of set some realistic expectations for people. Otherwise, without some real reality check, most people would think, the same reason I was drawn to the market is I thought I was gonna make money right away, and be able to drive Lamborghinis in 6 months.
Yeah, you do have.
What was thrown around. I mean, it still is being thrown around, right?
Oh yeah, you in many of your videos you do make fun of the Lamborghini money, and I was just curious if you had any experience then in these chat rooms that you talked about, whether they promoted Lamborghini money and an easy way to fast wealth. Did you get exposed to that kind of promotional hype early on?
Oh yeah, that's what was drawn. I was drawn to it. I mean, the couple of chat rooms I was in, usually there's a huge banner of the guy in front of Lamborghinis. It's like bright orange, bright blue. I mean, that's everyone's seen the ad, right?
Yeah.
Yeah.
Yeah, I noticed one of the videos that you have. It's quite funny, where you actually got I think it was a green Lamborghini, and made a skit on that, kind of making fun of that whole that whole hype crowd. So, did you feel in any way? Did you feel tricked by these kind of grandiose promises, or of a rich future by these chat rooms?
A little bit tricked. But to be honest, I think this is every trader's rite of passage, because you kind of have to go through that to kind of understand. Oh, I have to put work into this. So I have no regrets. To be honest, I feel really thankful now looking back, because let's be real. If it weren't for those kind of advertisement promising, you'll get rich quick, most people wouldn't have gotten into trading. And, if you had told me that this is something I have to grind for 2 years, on top of working my job, and I spend like 10 hours a week working on trading, and I might lose, a couple $1,000 doing that, I probably wouldn't have looked into trading. So I'm thankful, to be honest. Like, it sucks that I lost a lot of money, but I think everyone has to go through that. Yeah.
Yeah. In your videos, you definitely seem to have a natural flair for acting. Did you learn any of this in your VFX job, getting exposed to actors and actresses, or did you start any plays or anything like that, or is this kind of like a hidden talent that came out as a process of this YouTube channel?
I think it's just something that, because you have to understand, like I'm naturally introverted. So the only way where I feel comfortable to talk is if I'm at home by myself in front of the camera. So it will be very different if I was in front of a lot of people. I wouldn't be able to do the same thing. This is what introverts usually do. Like, they're only talkative when they're by themselves talking to a camera. Yeah, if you put me in front of the crowd, I don't know what I would do.
So with 1 million subscribers, I imagine some people are quite curious whether your YouTube channel usually generates significantly more or less income than you can get from trading.
Oh my God, I wish I made more from YouTube. And that's a fair question, but it's not as much as people think. So like on an average day, I probably like the YouTube will probably make like $200, which is good. Like $200, like if you do this for like the entire year, is how much? 100
70,000?
70,000.
Yeah.
Yeah. So I mean, it's decent. Like somebody technically can live on that, but for me, it's not like it's not as much as I need or want to make. So the majority of my income is still from trading.
Mm-hmm.
And at the same time, now that I have a videographer and I have someone who helped me with the videos, so like all the AdSense revenue goes to my team.
Oh, really? Okay.
Yeah.
Mm-hmm.
Yeah.
So
it's kind of why I'm investing back into the YouTube channel, essentially.
I see. So all those special effects that you put into your videos, do you do that?
I used to. In my first year of YouTube, I had no help. It was just me doing it. But nowadays, I have a videographer and an editor.
I see. It saves you quite a bit of time then.
Yes.
Great. I'd like to move on to transitioning to being a part-time trader with a full-time job. So when you were trading while you were working, did you focus? I mean, how did you manage your time to be able to trade? Did you focus in on narrow areas of the market or just certain time frames? What did you do?
This is where I feel really blessed and grateful that I'm living on the West Coast time zone, because if I'm in LA, Vancouver, Seattle, San Fran, you have to wake up early to prepare for the market. So I used to wake up at 5 a.m. Nowadays, I wake up at 4:30, but 5 a.m. to 6 o'clock is kind of like the studying and the planning part, doing all the research. So I used to do that every day. So from 6:30 to 8:30 is when I will actively trade. So after that, then I'll go to work.
Mm-hmm. I see.
Yeah.
So any tips to consider for our part-time traders who do have a full-time job?
You have to, ideally you get to work from home. That wasn't a thing back then in 2014, 2015. But nowadays, I think a lot of employers are pretty flexible. So you can talk to your employer, negotiate whether you can work from home half of the week and be able to kind of manage your time between work and trading. So block out certain time slots for trading. If you're on the East Coast, it's a little bit tough, but I talk to traders who schedule to start the actual 9 to 5 at 11 a.m. market time on the East Coast, and they just focus on trading from 8 o'clock to 11.
Mm-hmm.
So it's doable, but you have to be very, very, very productive with your time and really good at managing and time blocking.
Did you ever calculate the percentage annual return that you would need to replace your working income so that you could transition from a full-time job to a full-time trader?
So I didn't use percentage, but I used a hard number. So at the time when I was in LA, I was making about, in US dollars, probably like $60K per year.
Mm-hmm.
And by the way, $60K is like including all the crazy overtime. So it's not a lot of money. Sometimes I work 12-hour days, but $60K per year. So at the time, I just want to have, at the time I calculated my living expenses, which was around $25K per year. And for one person at the time, that's, nowadays that's probably not enough, but back then it was. So for me, I just want to have one whole year of money saved up from trading and sitting in my bank account. So I want to be able to have that liquid cash, $25K in my account. That's when I know that I'm ready to trade full time.
I see. So that sounds like a good point for traders to consider, is have that runway, right? Have that buffer so that you don't have the pressure of having to make your rent money, every day weighing down on you.
Yeah. This needs to be separate from your trading account, because at the time, I believe at the time when I quit, I was trading with a $40K trading account, and then the $25K for living is out. It's in my bank account. So keep it separate.
I see. So how many years after? So you started trading, is it around 2013? Is that correct?
Mm-hmm. Yes.
And then you started trading full time about around what year?
I started trading full-time 3 years after, so in 2016.
2016. Okay, so you had 3 years of experience to go on, and you had a year's worth of expenses saved up.
Yes.
Okay, great. Transitioning to being a full-time trader. So you quit your job in 2016, right? And started trading full-time?
Yes.
Yeah. Did you share any of this with family or friends?
Well, I kind of waited a little bit. I eventually told them, but I told them after well into my first year of full-time trading. When, at first you're going to have some rocky months whenever when I went full-time. There's some rocky months where, I wasn't sure if it's going to work or like a break-even month. But once you get into the flow of things, then I realized, okay, like I should just treat trading the exact same way as if I was still trading part-time, because that's kind of what I was used to after 3 years of practice, right? So I had to treat it the exact same way, use the same routine. Nothing much has to change besides the fact that I'm not going to work at 9:00 anymore.
I see. So did you expand your trading hours that you would do the trades because now you're just doing it full time? Or did you still keep to trading in the morning and then working on YouTube videos maybe in the afternoon? Did you keep to that same kind of schedule?
Yeah. So at first, when I first started trading full time, I would trade the entire day. And I realized, this is pretty stupid. I'm throwing away a lot of profits after my local time, 10 a.m. So that's where I kind of, YouTube is one of the things that I started doing as a side project to distract myself. But at the time, I also did a lot of other things. Like I did a lot of online businesses with my friends. I was into real estate, did some house flipping, everything, like all these like side hustles I was doing was just to make sure I occupied well after 10 a.m. and don't give back my profits. So even now, that's still the best time for me to trade, before 9:00, to be honest.
Yeah. Can you share with us a little bit about your bread and butter typical trades that you do?
Yeah, so that kind of evolves over the years. I used to trade a lot of small caps, but nowadays I trade more on the large cap side, because this year and last year, the large caps have been so volatile, and I love it. So what I like, my bread and butter setup, is whenever there's a huge gap on a large cap stock, any sort of news catalyst that's positive for the stock. So I'll see the gap up pre-market. And then usually if you look at any huge gap ups, there's usually some sort of profit taking at the open or sometimes pre-market. And then I'll identify that. And what I like to do is to buy the reversal after it's did the profit taking. Let's say, for example, retracing 30% of the overnight gap, then I'll go long and buy the reversal back to the pre-market highs.
I see. And then when you have a dip, say on a earnings miss, for example, do you short at the open, or like kind of what are you looking for to go long or short?
Yeah, so earnings miss, it kind of depends on how the chart is set up. So sometimes earnings miss and it gaps down, that kind of just ruins the play. So if a stock has gapped down way too much, I don't like to trade it. But unless it does if the earnings is really a miss and they missed on all metrics, EPS, revenue, guidance, and then I'll even listen to the conference calls. So that's a really quick, fundamental analysis I'll do on the stock. The calls sometimes can take a little bit longer, but I'll tune in and listen to it. And usually for the tech stocks, especially the recent ones, it's very really sensitive to what the actual earnings are versus the expectation. So a lot of times that's where you can see the surprise factor. Whether it's a negative surprise or a positive surprise, if it's a huge miss, then sometimes the stock doesn't even bounce for you to find an entry to short. But then if it's like a really, really bad earnings, I'll try to find entries here and there to short. Essentially, you're joining the trend to the downside. Like that's when you see like a huge bleed out. The stock will literally fade the entire day.
Do you find that the big cap stocks that you go long on breakouts or short on a, say, earnings miss, do you find them more suitable for holding for multiple days or weeks, or you just simply strictly get in and get out the same day?
Yeah, I still prefer to just day trade them. I used to hold some of the stocks overnight, but I would say since 2022, I think the overnight gap up and downs, it's a little bit too irrational. Everything is so headline sensitive now. I just don't like the overnight risk, so I don't hold much overnight anymore.
What was your transition from small caps to large caps heavily influenced by liquidity drying up over the last year and a half?
Yes, and also I was reviewing my journal at the end of, I believe, 2021. That's why I realized, okay, like small caps, when it's great, like especially the multi-day runners, you can make a lot of money. But I also look at my losses on the small caps. It's just like, oh man, like if I just take out small caps altogether, I will have a much, maybe I won't be green by much more, but it will be a lot less stressful. Yeah. So I was looking at, like the small caps, trading them all together, the wins and losses. It's not adding that much extra to my overall P&L. And the large caps are just so much more, I wouldn't say easy, but they're a little bit more predictable than the small caps. So that's when I started thinking, okay, maybe I should just only trade the small caps when I see something really, really good set up instead of trying to make it work every single day. Yeah.
Right. You mentioned in one of your videos that being in tune with your emotions is an integral part of achieving success in the market. How much of this do you think is just simply tied to the position size, to optimize your position size so you don't get too emotional, but you have some skin in the game?
I think, I think some of it. But usually when someone gets really emotional when they add sizes, you want to be you want to be a little bit uncomfortable, but you shouldn't be emotional. If you're emotional after adding size, it means you added way too big, too fast. So if I'm normally trading, let's say, 1,000 share lots on the stock, I wouldn't overnight change it to 2,000. I'll increase it slowly. So, maybe it's 1,200, 1,500, slowly over the course of a month or a couple of weeks. So it's a slow increase to allow myself to kind of adjust to the position size. So usually the emotion's not, for me at least, it's not from the position sizing. It's just from doing stupid things. Like if I add to a loser, for example. Yeah.
Excuse the last interruption here. This is Tessa. We hope you're enjoying this episode so far. If you love the podcast, please give Chat with Traders the best review you can on whatever platform you're listening from. This will help us to keep the episodes coming. Also, if you haven't subscribed to our email list, please hop on to chatwithtraders.com and click on subscribe so we can keep you posted of information that may be of importance. Thank you. Now back to the chat with our guest.
Have you ever used or consider using ChatGPT for your investing or trading?
Just AI in general. I think I'm starting to kind of explore the avenue, but I don't think it's ready quite yet. I think at the moment it still requires a lot of human effort, which is fine, but I think eventually we'll get there overall in trading.
What kind of rules have you set for your trading, and how did you come to discover and create them?
I think it's I do a lot of journaling. So it's from my journals I create rules for myself. For example, something I find is like I usually trade more on my red days. And then let's say on a green day, I'll place 4 trades. On my red days, on average, I was looking at this a couple months ago. On my red days, I'll trade 6 to 7 trades. So knowing that, a lot of times about, like in trading, making money is one aspect, but the other aspect is trying to lose less, right? That's the other aspect a lot of people don't think about. A lot of times you need to analyze your losses and look at, okay, on the red days, if I just stop trading after 3 losses, what would my P&L look like? So delete those losses. That's what I did. Delete the losses after the 3rd trade. And I realized, oh my God, my red days will be so much smaller if I just stop trading after the 3rd trade on my red days.
Right.
So I did a lot of that to create those rules of, okay, you can only trade until 9 o'clock your local time, or you can only, take 3 losses on the day and be done.
What were the things that finally clicked for you in your trading that was a turning point for you, where you started to become consistently profitable? And how long did it take? Did you say it was like 2-3 years?
Yeah, I became profitable after 2 years. And then I realized it was, and after year 1, I started taking risk management more seriously. So that's the big part where I used to have varying amounts of risk for all the different trades I'll take. So on small cap, I'll be risking at $200. On a big cap, I'll be risking 50, vice versa. So it's a little bit too erratic. So what I found out is if I risk, so it all goes back to my journals. If I go back to my journal and kind of look at my entries and exits and the share sizes I'll take, I'm taking varying amounts of risk. But if I set the risk constant at these 4 at the very beginning, every trade now, instead of risking, all the different amounts, every trade, the risk is now $50, or for me at the time, $50, then I will see more success in terms of managing my risk, because the risk then will be kept around 50. With slippage, maybe $56, $60 slippage. But then this way it controls my risk to, okay, so my max risk on the day is, for example, 2x my risk. So that's how I realized that, okay, I should be, looking at my position sizes from a risk reward perspective, rather than thinking how much I want to make, which is kind of the opposite of what most traders do.
And then how often do you add to your winners? And if so, is it a significant amount?
Yeah. So it's only after I started, managing the risk, so keeping it constant, then I'll look at on my journal, okay, which are the setups that I'm best at? Usually where I'll make, 3x or 4x the risk, then I'll only add into winners on those particular setups. And all the other ones, I'll use the same lot of risk. So maybe for the good ones I'm really good at, I'll 2x my risk on those trades.
I see. So you're what you would consider your A class setups. You would double the amount that you apply to that trade.
Yes. So at the time, because I was trading still relatively small, doubling my risk overnight, it was still manageable, because we're talking about $50 risk at the time. So doubling that would be $100 risk. It's a lot for me at a time, but I was kind of pushing myself more into doing that. And that works better because, in my opinion, a lot of traders, when they add size for all the setups they have. But you should add size to your best setups.
I see. So for those traders who are struggling, and hurting right now, any advice you'd give them?
I think you want to make sure you have a robust journal. You want to go and look at some patterns in terms of your own human behavior, whether your mistakes or emotions, or whether it's your position sizes, for example, from your journals. That's you have to review them, both your winners and your losers, because if you treat each and every single day as like a brand new day and you don't journal anything, there's never gonna be any pattern or routine that you can establish for yourself. Everything will be random. And the market is random enough, right? So the only thing you can control is how you trade. So for people who are not tracking the setups in your journal, they need to, I highly recommend you to start doing that.
So in the kind of broad economic news, we've heard about the, different banks blowing up, Silicon Valley Bank and First Republic. Have you changed anything about your trading style or how much money you keep with the broker as a result of these bank blowups?
Yeah, that's a good question. In the States, I think it's up to 250,000 for all the deposits as well as the broker accounts. In Canada, so yeah, so I make sure if my brokerage accounts are with the States, with the US, I keep it max at 250K. But my Canadian ones, the Canadian regulation is a lot different. Where deposits were only insured for up to 100K, but the broker accounts, you are insured for up to $1 million. So that I did redid some like asset allocation, looking at my trading accounts. But yeah, so yeah, after seeing what happened to SVB, I got a lot more cautious, especially with my US exposures.
So to wrap things up, what do you struggle with most?
I think I'm a very stubborn person. I think you hear a lot of traders say that. So I've gotten a lot better over the years, knowing when I should stop. But being, we all have a little bit of DJing in us, and being that I'm still, sometimes I still feel like I'm a DJ. I think a lot of times I do struggle with with stepping away even till this day. So that's kind of my biggest struggle. Not every single day, but like it probably shows up once every month where I'll just keep on fighting and trying to make it work. But yeah, I'm a lot better at it now. It used to be every week or every other week, but now it's once a month where I have to fight my over trading tendencies and not be a degen.
I see. So beware of revenge trading, right?
Yeah, revenge trading, trying to go back to make it work, or go back to a stock that I lost money on yesterday and make it work and think that's revenge on the stock. It's really stupid, but yeah, I mean, traders what kind of, you have to be kind of a little bit insane, a little bit weird, out of whack to want to do this thing for a living, right?
Yeah, exactly. So if a close friend or a family member asked you if they should get into trading, what would you tell them?
I think it depends on their situation. I would say if you have $5,000 lying around that you can afford to lose, then it's great. It's a great way to start learning about the market and to see if the skill potentially is something that you can utilize to make. Like the amount of upside in trading is insane as long as you are okay risking an initial capital. So I'd say, if you can afford to lose the first $2,000 or $3,000 you have, or $5,000, then that's great. But then if you are trading with the last $5,000 you have in your bank account, I would say don't trade.
Right. So trading with just kind of gambling money in a way.
Exactly. Yeah. Especially in the first year, most people will probably lose it all.
You got a good reminder. Well, thank you very much for coming on the show, Shay. How can our listeners get in touch with you?
Thank you, Ian, for having me. And if people want to get in touch, you can check out my YouTube channel, Humbled Trader, or I'm also on Instagram, Humbled Trader as well. And my Twitter is Humbled Trader 18.
Fantastic, Shay. Thank you for coming on Chat with Traders.
Thank you, Ian. Thank you, Tessa.
You've reached the end of this episode of Chat with Traders. But rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes. And we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Trading in the financial markets involves a risk of loss. Podcast episodes and other content produced by Chat with Traders are for informational or educational purposes only and do not constitute trading or investment recommendations or advice.
This is episode 262 of Chat with Traders. I'm your host, Ian Cox. Today, I will be stepping in for Tessa to provide an introduction to this episode. In this special episode, we deviate from our usual format. We are presenting a recording of a recent discussion that took place within our Chat with Traders community on a Zoom call. The discussion focuses on the journey of a beginner trader to becoming funded by a prop firm. The conversation features 2 members of our community, Henrik Johansson and Patrick Peterson. If you remember, Patrick was a guest on episode 260. This time, Patrick leads the discussion with fellow trader Henrik. Other members of the Chat with Trader community, including myself, were present. This episode offers a unique opportunity for listeners to gain insights into the trading experiences of the fellow traders inside our community. Specifically, you will learn more about Henrik's background, his trading strategies, and how he achieved his goal of becoming a funded trader in 60 days. This milestone was crucial for Henrik at this stage of his trading journey. We have chosen to share this recording with a wider audience due to the high level of interest among traders who are considering or exploring the possibility of getting funded. Moreover, this discussion provides a more intimate understanding of the mindset, processes, and strategies Henrik adopted while trading alongside Patrick during the 60 days. Additionally, you will hear Patrick sharing in more depth about his strategies and techniques that was only touched on in episode 260. As a raw community recording, we apologize for any deviation in audio quality from our regular podcast standards. The recording spans nearly 2 hours, but it is filled with valuable insights, ideas, entertainment, and humor. We hope you enjoy it.
I'm so happy that you are here. So thank you, Scott, Ian, Morat, Nuno, Arasimo, Michael, and Tessa. Okay, Henrik, say something about you. So what do you trading? What do you do now? What is your background? It's your show now.
So my background is actually in engineering. I've been doing that. I've been working at sea for about 20 years as an engineer, and then ashore in shipping companies as technical superintendent and so on. So that's my background, and I've had my own company also for a little while. Then I decided to take on trading. I like the idea of the flexibility and the freedom, and hopefully also the financial freedom eventually over time. The main reason for me was that I was looking towards freedom and not having to work together with other people. It's not that I don't like other people, but it's like, decide for yourself what to do. And so I started right now. It's actually 1 year and 3 months, 4 months almost ago since I opened my first chart. I had no clue what to do, but it came to me eventually. I took a few online courses, like most people, I suppose, watched YouTube and so on. And one of my first mentors but actually someone I followed was Tom Hugard. And I liked his trading style with the price action, and I liked his approach towards the mental game. So naturally, since he was trading the 5-minute chart, and I was trading the 5-minute chart as well. And I spent huge amount of hours on back testing and research, trying to find my own setups and testing the setups by back testing, like back testing several months, year, 2 years, and then trying them real time. And I think I was quite good at the mechanical approach. Like if I had decided based on my back testing that I wanted to take a trade on a certain signal, then I did it. But the problem for me was basically managing the trade and finding the good exits and managing my stop loss and all those things that doesn't come by itself immediately, of course. So anyway, I think in February I joined Chat with Traders community, and that was after I have listened to a few podcasts by Chat with Traders. And this is also when I met Patrick, because he was my accountability partner from the very beginning. I joined the TAP program from the very beginning. So that's how we came to talk. And then it developed over that. We traded together a lot, and I changed some of my approaches and the style, and I kept some of it. So I tried to find the golden nuggets from both sides, so to speak. And here we are today.
Let's look back 60 days ago before we start the prop firm journey. What was your main trading journey? What do you trade? You talk about the 5 minutes. So what was you looking for?
Basically, I think I'm a breakout trader. That's I didn't mean it. It's not meant like that. I didn't mean it to be like that, but that's how it became. That suited my personal style, let's say. So I need to see the breakouts, and I trade the indices. I should mention that as well. Yeah, indices, mostly DAX and FTSE on the European sessions, and then Nasdaq and Dow Jones on the American sessions. But since our journey here, I've gone over to only trade in Nasdaq. Yeah, the setups are mostly breakouts, and I need to see the price action. Basically, I have a kind of a pattern that I see first, but I don't take a trade based on that pattern only. I also need to see the price action and what we call the nervous candles, so to speak, that we see that, okay, there is something pushing here, and hopefully it's pushing in the right direction, and then I take the trade, and that's it.
Yeah, nice. And do you remember what we have changed that you was ready to say, now I'm interested to become a prop firm further? So I remember when we have our AP sessions for the TAP program, where we was meet regular. One of the biggest parts what we talk about was every time cut the losses fast. So
yes.
I was talk to you every time. So this was the AR strategy, 2-1 or 3-1, and I was talk to you every time. Man, you have your cut your losses fast, and I remember that you was a little bit depressed because you have some good winning weeks, and then you have some week where you make some losses. And then I was talk to you why you use your own capital and why you don't choose some prop firm. I talked to you also about the trading copies when you have a trade copy and you trade the futures. So you place maybe one trade and you place this in 10 accounts, prop firm accounts, and the risk is much easier for you. And you can make tons of money. And I think this was the point where I catch you, correct?
Yes, I think so. And I want to go back also to where you said cut the losers quickly and cut them short. And yeah, you're right. I was trading based on R's, like risk to rewards ratios. And I could, if I had decided that, okay, this is what I'm prepared to risk to get that kind of reward. But then if the market wouldn't want to give me that reward, I would still let the market sometimes take me out with a full R, let's say, loss. And you showed me also to trade on the 1 minute chart instead, which is better in a way. In one way, I think it's better when it comes to determining if you want to cut the losers very quickly, because you can see the price action more clearly and the patterns there. So I became, I would say, quite effective with that after a while to cut the losses. That was the main point, I think, for me that turned it around. Because like you said, I had a couple of actually good months, where I really confirmed that my back-tested setups and strategies really worked. But then I think it was in April, late March, early April, I had a losing month, and I just kept on losing, and I didn't know what to do. And you just told me, why do you keep hanging on to those losers? Why do you give back the money when you have a profit, even if it's not 1 hour, 1 full hour, what you decided you want? Even if you have the profit, just take the profit, and then get in again if it goes the right way. So that was a big turning point for me.
Yeah, and I remember some lesson from my famous boxer. It's Mike Tyson. He say everybody have a plan until you get the punch in the face.
Yes.
So as a trader, every trader have a plan. Every trader have a backtest plan until you get the punch from the market.
Yes.
So, and in this case,
always changes, so yeah.
Yeah, the market is always changes, and I think this was the beginning where we say, okay, now it's maybe time for you. First, we change your strategy here. So you was trading in the morning.
Yeah.
And I was told to you, hey, you miss all the action from the US market.
Yeah.
You remember? So
yeah.
What was you doing?
Yeah, I was trading from 9 o'clock in the morning when European markets opened, and I traded until basically lunchtime, so 3 hours. And then I was doing something else. I also had my company. I still had my company on the side, just doing some consultancy work. I did that for a couple of hours. And then I started to trade when the US markets open, which would be 3:30 our time, yeah. And then I traded until basically 5 o'clock, and that was it for me. So, yeah, when we started to trade, then I just let go of the morning sessions. I didn't trade it anymore, and then we started to trade the American afternoon sessions instead. And I see the action there is so much greater than actually the European sessions. So
yeah, and also it was the big impact for you. I remember because of the tools. So when we watch the European market as European people, we have not the tools, or we can have the tools, but we pay so much money for this.
The level 2 day.
Yeah, but we can use many tools for the US market.
Mm-hmm.
If everyone has some interest, they can write us some direct messages or no problem. But this was a game changer for you when I talked to you about level 2. Options flow and all the stuff, how you can see how the future market is rising. Yeah. So I give you the example about the QQQ and the SPY, the ETFs. It was never before in your mind, correct?
No. And now I must say that I feel completely naked if I don't have the tape in front of me, like the tickers. Yeah. And when I see the level 2, I can, of course I can trade without it maybe, but I feel naked. So I need to have that on one of my monitors all the time, And
don't forget the news.
The news. and what really convinced me to start a subscription with the news was when we had that fake explosion on the Pentagon. Yeah. That was 1.5 months ago. And we were sitting there and trading, and you had your news on. And I think you heard something, or you saw on Twitter. I don't remember it now, but you said,
I was.
And we just took a short position and we just wrote it.
Yeah, this was the Pentagon news fake. I have my news squawk on.
Yeah.
And we get the message that a bomb is exploding near the Pentagon.
Which is terrible.
But this is completely terrible. But no confirmation and all this stuff. But
nothing on the news, nowhere.
Yeah, nothing on the news. Nothing.
No.
And I told you, come, let's put us the full money power and short the shit like now we can. And we do it. So I do it. You was the first seconds you was not check it.
I was hesitating. So I didn't go all in. So,
we go all in, and we shorted like shit. So and we make big money. So it was really nice. So this was the beginning. So and then I think we make a point how we select the right prop trading, what meets your needs. So what we do, tell the people something how we select the right prop firm, what we are looking for.
Yeah, first of all, this was completely new to me. I didn't even know about it. I heard about the S&B Capital and those things, but I thought, well, this is not for me. That's way out of my league. And then you showed me a few examples, Patrick, where you can join this prop firm or join that prop firm, just buy an evaluation account, and if you make it, you make it. If you don't make it, then you can go on to the next one or whatever. So we started to look at that. I think first I was concerned about the price in a way. So how much do I have to pay for this? So we found a few prop firms with good discounts where I bought.
Hey, it was 90%. This is not a 90%. Good discount. It was a fantastic discount. It was only $20 US. Yeah. So
I bought the account. I think it was actually $16 for an account, a 100K account. Then I came into the first mental pitfall, I would say, because when I was trading that account, it didn't mean anything to me because I only spent $16 on it. I didn't, I tried to follow my rules, but somewhere in the back of my head, I didn't care about it. So I pissed it away, one account after the other, and just buy a new one. No problem. It's so fun. It's so fun to put on like 10 NQs and see what happens. Yeah. But that's a learning experience.
Yeah. So this is backtesting of live backtesting. Yeah. So it's not backtesting; it's forward testing.
How not to? Yeah.
But so this was a big mental issue. Yeah. So because not to gamble and to trade, it was a big thing. Yeah. So if you have maybe 10 accounts and you can buy in bundle with 10 accounts and you pay maybe $25 US for this, then you start to gamble. So you put the max full of buying power in it and see what has happened. So maybe it's you get it or maybe you lose it because you have 10 accounts. Fuck off. Correct?
Yeah.
So this was the biggest issue, and for all people who will get funded, I think it's not a good idea to take it not serious, because otherwise we talk about often that we not generate good habits. You remember?
Yeah.
So we was thinking, hey man, when we now trade like this, we get bad habits.
Yes.
We speak about every day when the day was over about the habits. What habits we generate now?
And
so
I think both of us in a way fell into that bit as well. You, as a very experienced trader, you did it as well. I mean, when we looked at the end of the day, how many trades did we put on today? It was like 219 or 182, something like this. Completely crazy. Yeah, no respect whatsoever for the account.
Yeah, I buy the challenge also, that we can see what has happened. So that we can trade together. So we have the same rules, we trade together.
Yeah.
And I think we play it like a shit.
Yeah. I guess it's when you're.
And this was the biggest mistake. This was one of the mistakes. So, but after this, so we become seriously. Yeah, I think 10 days. We lost 10 days. With all the shit gambles. So we can call it gambles. So it's fine. So it's a bad habit. Don't do it.
I think it's like an 18-year-old that can go to a nightclub for the first time of his life. He will get pissed drunk every day.
Yeah, and he tastes. I don't say it. So okay. So after this, what we do? I think we was saying, okay, now let us take it seriously, and we watch all prop firms. What happened? So I think we watch all forex prop firms. So you say to me, hey, what rules have the prop firms and why have they the rules? Yeah. So we treat it like a business at the end. So we was watching all prop firms. So what are the rules from the prop firms? I think they have many different rules. So many have gambling rules, the average lot size.
For example.
Yeah, we have the news rules. You cannot trade on the news sometimes. We have the rules you can trade only 20 contacts each day.
Yeah.
We have the rules about max position size. We have the drawdown rules. We have the end of the day drawdown. We have the trailing drawdown rules. There are so many things outside. And we see also that maybe you have a good entry price for the challenge, but if you get funded, you pay a lot that you get the funded account.
Yeah.
Do you remember there was someone, you pay maybe $100? We don't say any name now. You pay $100, but when you get the funded account, you have to pay $900 for the signing fee that you get in funded trader. So and this was completely shocked us. You remember, yeah?
Yeah, I remember.
So and in this case, we was looking for someone who fits your needs. So you are a futures trader, and we want not the rules. So we want not the news rules. We want a good drawdown for us, so that you can handle it. So this was the most one, so that we have not thinking about the trailing drawdown, and we want completely free in our trading style. So if we maybe trade 100 contacts today, maybe we won't trade tomorrow only 10 contacts. So we won't not have any gambling rule, something like this. And we can name it. So we found Apex for you, and this was Pity on Meat. So tell the people something about how it was going.
Yeah, one of the biggest issues for me was, of course, the trailing drawdown. I was not used to that from my own account. I was trading CFDs on my own account before. And the trailing drawdown was really giving me a headache. And some of the prop firms offered really small drawdown and the others bigger. So that was important for me. Then the rules, well, I think we have one thing in common, and that is that we want to trade the big moves, yeah? And that's something I did before as well on my CFD account. I had actually some setups that I had only for news, and we traded that as well together, the earnings and whatever. Of course, your performance was way better than mine, but anyway, we had the same idea, I think. So that was important to not be locked out over the news, for example. I want to be able to trade that. Then the pricing, I mean, once you get funded, if you get funded, then it's important with the pricing for that as well. And I think those were the main issues for me that I wanted to keep under control, let's say, to suit my trading style and my needs. So we found this prop firm. We tried a couple of them, and we found this prop firm in the end. I think we could say the name, yeah?
Yeah, I was saying this.
Yeah, Apex. I just got a good feeling for them. It was like they seemed very serious, but still they let you run your own game to a certain point. And the price was okay. I mean, the entry price to get the evaluation account was okay. And now once I have passed the evaluation for one of my accounts, I can see also that the price for the live account is very good as well. So yeah, that's what we chose.
Okay, let us make a break here, Henrik. So Ian, maybe you can speak and ask a question.
Yeah. Hi, Henrik. So just curious about, is it correct that you opened up, did you say 10 different prop firm accounts, or were you joking?
No, it was not 10 different prop firms, but it was, I think I opened 25 accounts actually, all in all, with the 2 different prop firms.
Oh, okay, with 2 different prop firms, got it. Uh-huh.
Yeah, but I must say something about this. So we was first choosing Lilo trading, and sometimes they have some good pricing. So they have a bundle. You can have 10 accounts, and you must qualify with 1 account in 30 days. So you get 10 accounts, and you can trade the 10 accounts like you want, but only 1 can qualify. And the biggest issue in this is when you have 10 trading accounts, you get really good comfortable. You say, "Yeah, man, if I pump up 1 account and I play it like not safety, you do it, boom, you lose your first account." And then you say, "Man, I have 9 accounts left." And you do it again. And at the end, you have maybe only 1 account or 2 accounts, but then you have the bad habit because you play 8 times before really shit games, and then you lose all your 10 accounts. And then you buy again for $25 10 accounts. And this was this was what we're saying about. It looks so good that you have 10 accounts and only one qualify, but if you don't take it seriously because you pay only $25 maybe therefore, so the price is maybe not a pain for you, you develop bad habits for the trading. So you get your risk management is poor, your choosing the trades is poor, and this was not good. So this was the point where we say, hey, now we have to stop this. We must become serious. We must trade our trading like a business and not like a gamblers. So it was completely gambling at the end. And this was losing 10 days.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Henrik, you mentioned earlier about your stop losses were that you were losing more money than you needed to because your stop losses weren't quite set correctly. Did I hear that correctly?
But I think it's a bit tricky to just say it like that. I think they were set correctly in a way, but what I should have done was to basically, if I saw that the market was changing its behavior, and even if it didn't hit my stop loss yet, then you can basically tell that now there is like a 80% chance that I'm going to be stopped out. But I didn't stop myself out then. I just waited for the market to go down and stop me out, to accept the loss. And I think that is something as a new trader, for me, you're listening to so many people and so many people are saying you have to accept your losses. Losing is a part of the trading business or game, yeah. And I think there is a very fine line between accepting losses and being complacent about the losses. Like, okay, could I have had prevented this loss if I've done something differently? Could I just trail my stop loss or tighten it up a little bit when the market starts to go against me? All of those little things. And I think, like I said, I think the biggest contributing factor for me to that I took heavier losses than I needed to was because of this that I heard over and over again from different mentors or YouTube players, that you have to accept your losses. And I think that got to me, that I just accepted them too much, unnecessarily.
So, did you find that you would end up getting out of your positions prior to your stops getting hit? And did you end up having to cultivate a feel for the markets, like actually paying attention more than you normally would if you just set the stop and you say, hey, well, I've got my stop set. I don't need to pay much close attention.
Yeah.
How did that work for you?
You know, if we go back to that part of not paying so much attention, I have to go back to my backtesting routines, how I do that, how I did my research. So I did my research and the backtesting only on paper. I printed out charts. I printed out charts for like 500 pages of months worth and years worth of charts. And I just, took a pen and I drew lines and I said, okay, so if I enter here, then I have my stop loss here, and I will not take profit until I'm 1R, like as much as I have at stop, as much as if I have 40 points stop loss, for example, I need 40 points profit before I take and move my stop loss. When I did that on paper, I often came up with like 50% win rate, 55% win rate, whatever, and that was completely enough. But then when you trade it live, you have to realize that you will not meet that kind of performance live. Whatever you do on paper, you will never meet that live. So maybe you will meet, I don't know, 50% of that live. I think my problem was that I just didn't take all the trades that I should have taken because I was simply not there in front of the screen, or I was afraid or something else. So when I took the trades and waited for me to be stopped out, then I just lost too much. And when me and Patrick started to discuss this, like you said, I tried to develop, and I think I did it. I have developed a feel, an intuition for the market to tell me that, okay, now either it's going to break or it's not going to break. So let's move my stop loss to break even immediately, more or less. And if it doesn't break and goes back on me, I will be stopped out. But it can always break again. So then I will go in again. I will not get paralyzed and say, okay, I was stopped out. So what do I do now? I go and get a cup of coffee. No, I just wait for the next break again. So I can get stopped out like 3 times on break even before I get the runner, before I get the trade. But that is better than to wait for the stop, for the market to go back on me, because it could have done that as well. Just as well as going the right direction, it could have gone back on me. And instead of being stopped out on break even, I could have been stopped out on minus 40 points, for example, with my old style. I don't know if that makes sense, but that's yeah.
Great.
Yeah, and also Ian, he was asking about the rules from the prop firm, correctly?
Mm-hmm.
So I can say something about this. So let's talk about 2 minutes about this. So when you see the prop firms, start with the Forex prop firms, where you can trade Forex, you can trade indices, you can trade gold, you can trade CFDs like this. So we have some one of this. We have the Fivers, we have FTMO, we have my Forex Fund, the 3 biggest ones. And then we have some others. So at the moment, when you watch the market closely, many prop firms pop out. And on the website, most of the time, they have all the same rules. You think like, hey, it's you can choose maybe only the price where you get the better price. But you find the details in the fine prints. And this is the dangerous thing. I think from the traders, maybe only 1% look to the fine prints before he buy. So in the fine prints, you find maybe some gambling rules. This means you must have an average from your last week. You cannot have maybe 50% trade more 50% than last week, or 50% less than last week. When you do this, then you gamble. So this is one rule, and this is very hard, this rule. And then you have a second one. You have the stop loss rule. So you have place stop losses. Then you have maybe news. You cannot trade the news. You cannot trade the FOMCs when it's beginning on something like this. You will find all these things in the fine prints. And this is my advice for all people who get interesting and get funded. Look first in the fine prints. What's in the fine prints before you buy something or marry it with something. And the The biggest issue is the payouts. When you get the payouts, so some prop firms give you the payouts bi-weekly. This is very nice when you get this. Other prop firms give you your first payout 30 trading days after 30 trading days. What is this meaning? So you have to trade 30 trading days when you get funded. So this could be happen. You get your first payout in after 2 months when you start as funded trader. And this is a big issue because it's the risk for the prop firm. It's very nice. They have maybe 60 days to pay you out, but in 60 days, it could be possible that you blow up your funded account and you get no payout. The other things is the limitation of the payouts. And also, someone is, if you have some end of the day drawdown, or you have a static drawdown, or you have a trailing drawdown, or what they offer as drawdown in trading stop and end of the day or a max drawdown. So you will find this all in the fine prints in details. So, and sometimes what you trade in the evolution is not the same what you trade as a funded trader. As a funded trader, you get harder rules, and you must see if you can work with this. Is this your trading style or not? Sometimes the evolution looks like sexy, but when you get the funded trader, it looks no more sexy because you trade with live capital, and they give you other rules. So in the forex, it's really special. In the stock world, you have trade the pool, you have day trade the world. I think there's some other one, but this is peanuts. Day trade the world and trade the pool is the biggest one, and they have completely different styles. So on day trade the world, you have to pay for your losses. So that you have no challenge, you have no challenges. You have give them money that you get instant funding. So you have to pay for your losses. You get the money. You get maybe 20,000 US dollars, but you have to give them 500 US dollars as deposit for your losses. This is a one way. On trade the pool, you have the challenge. You have different rules. And on the futures world, it's the same. So sometimes you have end of the day drawdown. You have payouts. You get not the full payout from your profits. You get limited payouts. Maybe you get the first month you get 1,000, the second month you get 1,000, the third month you get 1,000, and after the third month you get the full payout. So because they told you they want long-term relationship, you can look in the fine print. They say they want with you long-term relationship, but when you realize 4 months, after 4 months you get the full payout. It's only mathematic. In 4 months, how possible is it that the people lost your funded account? I would say more than 60%. I have no idea, but my feeling is more than 60% will lose their account, and they get never the full payout. So this is how you're looking. You must looking for the fine prints, and you will find that in everyone. So on the website, they will look always sexy. They look all the same. It's the pricing, all the stuff, but you have to watch in the fine prints. You will find the different in the fine prints. Yeah.
So we have a quick question here from what about the trailing drawdown with Apex? And to add to that, when is the drawdown calculated from? Is it intraday or is it end of the day or end of the week?
Apex is intraday. So, and this was the curious thing. So what we have to handle, Henrik and me. So on Apex, it's always from your high. Maybe you make now on your first trade 500. You are 500 US dollars in profit, but you don't take your profit, and you take maybe your profit when you 100 US dollars profit. So this means you lost 400 US dollars from your drawdown. So because your high was 500, and you catch it only on 100. So this means you lost 400 US dollars for your drawdown. This is the trailing drawdown, not the end of the day drawdown. So, and the risky thing is when you trade big with a trailing drawdown and you have not enough trailing drawdown, maybe you have only 1,500 trailing drawdown, and you trade the news or some earnings, and it can be very fast up. You may be 500-600 in profit, and then you get a strong pullback in seconds, and you find maybe your position in $100 loss. What is this meaning with a trailing drawdown? 600 profit, 100 loss. You lost $700 from your trailing drawdown. So this is the trailing drawdown. It's always from your top to your loss. So this is the dangerous thing from the trailing drawdown.
That was the most, what to say, the biggest change for me as well, because I was used to just staying in the trade. That's also something we discussed, Patrick. Yeah. That when we had this pullbacks, when I traded my old style and on the 5-minute chart, a pullback was completely normal for me, and I would just add to the trade after the pullback. I wouldn't think about getting out just because it's a pullback. But if the market doesn't go up after the pullback, then I would have lost like whatever, $1,000 or something in trailing drawdown.
Yeah. This was why we was change the strategy. Yes. So we was saying, okay, we cut our losers very fast, but when we have some profit, we take the profit.
Yeah.
And we wait for the next setup. If we see something what is good to trade, bam, we are in again. We catch the move. We catch the $200, but we get out because of the trailing drawdown. Correctly.
I take profit much faster now than I did before. I saw a question about that as well. Take profit orders. No, I never. Actually, I don't know so much about this, but I never do any orders. I just play, market price and everything. Yeah, I play what I see, and it goes with market price, everything. So I manually execute the trade and I manually get out. I have my stop loss. That's the only thing. Sometimes not even that. It depends. If it's a news event, then stop loss is not good. That can kill you very fast. No limit orders, no stop orders, nothing.
I can give you an example why I think, on my point of view, maybe Henrik have the same point of view or he have a different point of view. You can say something about this. Why I use market orders? Because when I see some price action, I will become directly into the market. I know I can become a bad price, but I want directly in the market. When I put some limit order this in, maybe I don't get filled. Maybe I get filled. I don't like it. When I'm trade, I will become directly in, and maybe I will become directly out in 30 seconds because I have enough profit, or I take the losses. So it's my average holding time is most of the time 30 seconds, 1 minute, because of the trailing drawdown. Henrik, what is your point of this?
Yeah, I think I agree with you with everything you say there. I have used stop orders sometimes in my previous strategies on news, but the slippage can be humongous, and then you end up making nothing or just a little bit of what you could have made if you just played by intuition and the feeling. Because most of the times you have a feeling where the market wants to go before it does it.
So Murat, come live, ask question. Hi.
Hey, I wasn't sure how the format is.
Yeah, I know. You can come in.
So many questions.
Let me now kick your ass, okay?
Sure.
I'm 100%. I'm now ready. When you think about the fees, give a shit about fees. What are fees? Fees means it's maybe 1 tick or 2 tick in the futures. Give a shit about this. Mm-hmm. Why you think on the fees? Yeah, the fees can be really big. The fees can be put you out of the game, but don't think about the fees because you need only 2 ticks, maybe 1 tick. Then you handle the fees and then you're in a profit. Give a shit about the fees. You must think about only on your position size, that you don't get too big, or you can go in very big and then take it. So, and when you think about the fees, think about the micros and think about the minis. So if you trade maybe the MNQ, you pay a lot of fees. When you trade the NQ, you trade less. So you must think about like this, but never think about the fees. If you think about the fees, give a shit about this. It's only 1 or 2 ticks, what you have to do. Don't think about this. I know fees can be really frustrated. Henrik, it's really frustrating sometimes. Maybe you have 800 $800 US profit, and your profits are $400 US, and at the end you get only $400 US. But this is the game, man. I'm in Germany. We have some words. It's good to pay taxes, because when you pay taxes, you have make money, and when you pay the highest taxes in Germany, it's the best ever what you can have, because you be rich. You are a motherfucker rich person. So, and this is the same in the fees. So when I pay maybe $1,000 US or $2,000 US fee, man, I make a motherfucker profit. Fuck off.
Mm-hmm.
So please never think about the fees.
Fair enough. No, just curious because it's an evaluation account if that comes into the factor, but I agree with your point.
It does in a way, because the fees are included in your trailing drawdown, so you have to be careful with that. So I mean, if you take $1,000 loss plus fees, then actually you have lost $1,200 of your trailing drawdown, for example, if the fees were $200. Yeah. So that is one thing to think about. But usually when I trade this account, I always have in my case it's the Rhythmic Trader or Tradeovate Rhythmic Trader, where I can see the peak value and the cash on hand, I think they call it. So the peak value is, and the difference between the peak value and the cash on hand, or actually the liquidate threshold, this is where you have to keep an eye on that all the time and don't let it run away. So I try to keep it like maximum $100, maybe $200 difference. So if I have a trailing drawdown at the start of $2,500, I never want to be more than $200 difference between the peak and the actual value, which means that I could then have $2,300 trailing drawdown instead of $2,500, but not more than that. So in that case, the fees come into play, but I don't think about it when I trade.
Yeah. I prefer using limit orders. That's why I was asking if there's a big difference between limit and market.
No, it's the fees are the same in the evaluation. So when you trade your own bank account, then it's be different. But if you trade for the platform, you have static fees. So the fees are always the same and make no difference. Maybe we will change your trading style in the future also. So let's see.
Maybe.
Okay, so don't lose our line. So the second point of our part is, Henrik, how do we break through mental barriers? So what was first your biggest mental issue when you was in the challenge?
I think I don't know, maybe we discussed something that you remember better than me, but the first thing that comes to mind is that I like to hold on to my trades, and that is not good when it comes to the trailing drawdown. Sometimes it's not good, most of the times actually. So I had to break that one. Yeah. Do you have anything that you remember that I said or we said?
Yeah, 100%. You remember about our wheel?
The wheel?
The wheel is, so we have an idea.
Yeah. It always comes back.
This is the biggest mental issue from us. So we came up and we have an idea. So how we can handle this. So we have an idea. Next day we have a new idea. Then we have again a new idea, and then
after
we
8 days, we're back to the first.
After 8 days, we come back to the same idea. So the biggest learning from the wheel is it's not the rules, or it's not the trading. The trading style is not have the biggest effect on your way to get funded. The biggest way is your mental state. So, and when your mind will trick you always, and this was what the mind was doing with us. So he was saying, hey, man, maybe this was not a good idea. Let's change our trading a little bit. And then we change it. But at the end, we will come back every time. So this is why I call this a wheel. So we have always the same ideas, and we come back every time to the same idea. And we were saying about this. So the market is not every day the same. Yeah. So, and at the end, we will come about the trading style. Let's see what we have now on questions. Do any prop firms allow for swing trading? Ian, yeah. What do you mean with swing trading? Is holding the position overnight, or holding for long?
Yeah. I mean, do any prop firms that you've encountered allow for holding overnight positions?
Yes. On the Forex world, they give someone. It's calling like FTMO. They have swing trading accounts, and I think other prop firms have the same. So maybe the Fivers or other ones have the same. Tessa is saying trade to pool. Trade to pool have it at the moment not. At the moment it's day trading only, but they work on it that you can hold your stocks longer. Yeah.
I heard that that they will have that ready this week.
This week?
Trade the pool. But you that's heard? But it's unofficial.
Yeah. Oh, now we make some lunch at the moment. Okay. So maybe trade the pool. I have no idea. I cannot say something about this. I don't want to go in trouble. Yeah, maybe trade the pool have this also. So yeah, it's not many ones in the futures world. I have no idea. I think they have not swing trading accounts, but in the Forex world and in the stock worlds, yeah. So okay, why did Henrik change his trading style? This is the point 3. Why do you change your trading style? And what do you was changing in detail?
I think we touched upon many things already, and that was like taking profit instead of holding on to a trade that went against me. That is one of the biggest changes for me, I think. I changed from the 5-minute chart to down to the 1 and 2 minute charts, and I started to trade with just a couple of indicators, the SMAs, SMA 8, SMA 20, and SMA 200. I didn't trade with any indicators at all before. One very big change that came to me over this period of time, over these 2 months, I always wanted to treat trading as a business. That was my intention from the very beginning. And I tried hard to do it. But I see now, the last, I would say, I don't know, last month maybe, that it turned around. So now trading treats me as an employee. I don't have to treat it as a business in a way. If I lost on a day, I compare it to my previous job. You know, when for example I put together a pump or something like that. I was overhauling a seawater pump or you name it, and the pump is not working. Then I have to figure out what I did wrong, and this just comes natural to me now, and it didn't do that before. So that is one of the biggest changes. I think it's not like changing the trading style. That's not an answer to the question, but there's just one of the biggest turnarounds I've had that I can notice since we started this.
Yeah, okay. Tessa, maybe you can come with your micro and can clarify that trade to pool is not from CVT. So what is the relationship between, or Ian? So
so Chat with Traders, we partnered with Trade the Pool for the trading contest, and that's, I mean, it's just a limited partnership for a temporary period of time, and that's all. But we don't have any other relationship, any long-term permanent relationship with them.
Okay, and Trade the Pool is not the prop firm of CVT. So for clarification, because we get the message in the chat, and that we can clarify. We get the point. Henrik and Tessa was asking you, Henrik, knowing what you know now, what you have done, anything differently in your journey to becoming funded?
The first 2 things that comes to mind is, first of all, I would have tried this earlier, sooner. But I simply didn't know about it. I didn't know that it was an option for me. I thought it was like out of my league, like I said in the beginning. The second thing is that probably I shouldn't have gambled as much as I did in the beginning. But I also think that was a learning experience. It's something like, I'm not sure that it was really bad. It just, we lost 10 days. That's what we said, basically 2 weeks or 10 trading days on this gambling. But it's also, it makes you feel where are the boundaries. And I like that idea, to feel out, to actually reach the boundaries. So then I know, okay, this is that side and that is that side, and I have to stay in between. So, yeah.
Yeah, I have a question. So were you consistently profitable before going with the funded account, and then there was some trouble, or did you care about being consistently profitable before you went with a funded account? How did that work? How did your profitability work before and after?
So I wouldn't say that I'm a consistently profitable trader yet, even now. I was somewhat consistent, I think, for a couple of months before we started this challenge, me and Patrick. But like I said, I had like a few weeks or a month of consistent losers, basically, before we started this. And I just thought I had to do something because the market has changed. Something has changed and my setups doesn't work anymore. But I had come to the point where I was more or less a break-even trader, and I started to take out the salary from my trading account. So basically I had, for the last couple of months before we started this, I took out 50% of my salary from the trading account and the other 50% from my business. So I was in the starting pits, I would say, of being consistently profitable.
Yeah, thanks.
Mm-hmm.
Yeah, Scott, you know the 3 stages of becoming profitable? Okay,
maybe I only know the first stage of being profitable, but go ahead.
Okay, the first stage is you make losses. So this is the bad stage. And the second stage is you get break even, you take your wins, you take your lose, you take your wins, you take your lose. So this is the second stage. And the second stage is the most challenged part, because on the second stage, most of the people get frustrated because they don't see any light in the dark. And then they become this on the sweet part. They have only losers only 1 day each week. And now it's the part to how big is your loss in the 1 day of the week. Take your losses very smart. So this is why I preach every time to Henrik, cut your losses very fast. Bam, 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 get out. If you see that this trades doesn't work, go out. Because the market is so sexy, it gives you so nice setups. And when I see something in other communities, most people get done of the day in the first 2 hours of the trading, because they use his buying power on the first 2 hours when the market is open. And I have no idea why they do this, because when I real talk to you, the best opportunities will come in the middle of the day and in the end of the day. It's always the same. So when you can watch back the last 60 days, you have the best easy trades. I call it the easy trades, where you can make easy money. I know it's not easy to make money, but in these trades you can go big, and it falls very hard. Because for myself, I like it more when we come down, when the market goes down. Because when we get down, then this goes fast, and we can make fast profit. So when we go up, it's like step by step by step by step by step, and then the market comes down in maybe 5 minutes. And this is the easy trade. This is what I call the easy trade. When we are in this area, then it's easy to make money. You can make maybe a bigger position, and you find your ass in a good profit area.
What time of the day do you find that these easier setups occur?
The easier setups is in the middle of the day and the end of the day, and it's easy to say why, because when the market is wake up, and maybe it comes down or maybe it comes up, and you can watch what's going on with the market. It's better to watch what's going on with the market. and then see when the market touch maybe in resistance, maybe in support, and now is the point that the market will change its direction. And when you know the point, then you can go in. Then you know the direction. And then you get the easy trades. Then you catch the easy trades. And you must be watch carefully when you trade maybe the indices. Watch carefully the Nasdaq and the SPY, so that they get in the same direction. You have this often. So we have this last week. Henrik, you may remember. So the SPY is climbing and the Nasdaq will falling. But the Nasdaq doesn't falling because the SPY is climbing. But the Nasdaq looks like ready to fall. And when you notice that the Nasdaq is looking ready to fall, then wait. Watch the S&P. Watch when the S&P comes to the resistance and he cannot break it because the Nasdaq is coming to fall. He's ready to fall. And when the S&P is falling, then the Nasdaq will falling so hard. So this is maybe one sign where you can looking for. And this is the easy trades. This is what I call the easy trades, where you can make easy money. In the other trades, you will stop out, you take your loss, you take small profits, and at the end, maybe you are break even, or you have losers, or you end of the day with you touch your drawdown or something like this. But Henrik, I think it's your show. You can say more about this.
Yeah, no, I totally agree. I was actually, before we started with this, I was always trading with Dow Jones on one monitor and Nasdaq on the other. And I over the months, I found some confluence rules, let's say, that exactly like Patrick is saying, that you can feel that one market is more hesitant than the other. And the hesitant market is the one that you want to short. When the other market has reached its resistance level or is ready to go down, then the first market will fall very, very hard. And that's a game I was playing before as well, this confluence game. So totally, I agree. And the trick, I think, especially for a beginner trader, is to just have the patience to wait for this and not trade in the meantime. Yeah, not overtrade. Just wait for it.
Yeah, and watch carefully. So we have on our charts the SMA 20, 200, and 8. Mm-hmm. And watch carefully if we have some bounces or holdings, maybe the 20 SMA. I give you an example. So on Friday, the SPY was always bouncing on the 20 SMA on the 1 minute time frame. And it looks like now we came down, but we don't came down because the SPY was always in the end of the day touching the 20 SMA, and then he came back, boom, 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 boom. But at the end of the day, the SPY cannot hold the 20 SMA, and then we get coming so hard down. And this was the point. And this is patient. This is what Henrik say. Wait, have patience. Look for the signs what the market gives you, and then catch the easy trades. So Tessa is asking a question. Now that you're funded, the pressure of getting funded is no longer there, right? So does this change much your strategy going forward? Let me say something before you go ahead, Henrik.
Yeah.
This is some question where only people can ask who are not trading with a profile. Because when you get funded, you have the same rules, or they change the rules from your evaluation. So you get the same rules what you trade in the evaluation. So, and now you have a live account. So you cannot trade. It's not good to change your strategy now, because with this strategy, what you have, you get funded. So when you change now your strategy, you maybe lose your funded account, and this is not so good. So have the same strategy, but place more safer. Because remember always how long it takes to get funded and how much time you invest to get funded. Not the money. The money is the second part. I think the time is more valuable. So you get not back the time, but you can get back the money. It's no problem. But you lose your time. And always remember when you get funded about this. But okay.
Yeah, I would say just to add to that, no, I think I'm just as nervous now, maybe even more nervous, because now is real money on the line. Yeah, And I cannot just get the account back by paying like $20 or something. So now I need to be careful. So I can tell you honestly that before I got funded, I was trading one NQ all the time, even two NQs. And my profits came quite big when they came. And also I took some bad falls when that came. But now I trade one MNQ because I want to make a buffer. Basically, I'm really afraid to lose my account, so I'm a little bit chicken now, and I trade one or two MNQs. I want to have my buffer. I want to have like $1,000, or preferably, I would like to have the safety net, they call it, $2,600 before I can start to take out profit. I mean, to take take payouts. So, yeah, I'm trading more carefully now.
But if you get trading with the prop firms, then you know all the stuff. So when you get funded, you get 100% nervous. And this is the point where the most people loses his account on the first stage. I don't know. I have no statistic, but I can ask someone who can give me some statistic about this. How many people will lose in the first 10 days his funded account? This will be a very great statistic, because they get so nervous. And when you take your first losses, I think you don't take your first losses, Henrik, in the first beginning. But maybe you take your losses in the first week with $500 on your funded account. I'm be 100% sure that you get completely nervous and you make many bullshit trades.
Yeah, I think so too.
Yeah, this is the dangerous thing.
Mm-hmm.
Okay, so which trading tools and indicators does Henrik utilize in his trading?
Yeah, so like I said, I started to use some indicators, very simple ones, the simple SMA, the simple moving averages, SMAs. And that's simply because since I started with a 1 minute chart instead of the 5 minute chart, I needed to find something to back it up with, back up my decisions with also. Patrick introduced me to his old mentor, not personally, but he introduced me to the courses of his old mentor, and he's using the SMA. So I started to do that as well, and more take on that style, which is better for the shorter time frames, I think. Other than that, I think price action beats everything, and I think we are talking about it a lot when we are trading, Patrick, as well. That okay, now you start to feel that the market wants something now. The market wants something, and then when you get that feeling, then you need to be with your finger on the mouse button, and you need to be ready to click immediately.
Yeah.
So yeah, that's the only things. And the other trading tools, I don't know. I mean, as I said, I start to use the level 2 data, and I can almost not live without it anymore. And I started to use the market squawk, the new squawks. Yeah, the options order flow. I'm charting on TradingView, for example. I mean, I'm just putting up my lines to draw patterns to see if I have some wedges or triangles or whatever you call it. But I'm not basing my decision on those. That's more like a guideline to see what kind of direction I think that the market might take. Like not 50-50, but it's 60-40 or 70-30% chance that it will go in one particular direction. And when I have that in my head that I think it's going to go up, for example, then I just wait for the nervousness of the price action to confirm that to me to take the trade.
Yeah. So we have a question from Nuno. How you define your risk management in your trading? Do you have intraday stop loss? A percentage from your account, like 1% or so?
I have my intraday stop loss. Like if I lose a certain amount in a day, then I will not continue trading. It depends on how the market looks like a little bit, because sometimes I can feel that I'm able to take this back, and that's also something that Patrick put into my head. That don't be satisfied with losers. Don't be satisfied with losing. Take it back if the market will give it back. But you can kind of feel that if you're just losing and losing and losing, like 10 times in a row, 20 times in a row, then okay, then I will never take it back today. But yeah.
But this is bullshit. This is completely bullshit. So you don't stop it. You don't stop it. So because when you say some really great setup and you watch the chart, you cannot say, I'm not trading anymore. when you really mean this professional, and you say, hey, well, fuck, I take my losses, I don't trade it, then you must shut off your computer and take a walk and come not back.
Yeah.
Otherwise, if you watch your charts, you will take the trade because you think maybe now it's a good time and now I can make my losses back, and then you get your losses again.
Yeah.
But sometimes you bring your losses back to the profit.
And that's something that I've done more often recently. I can be down. I don't count the percentage. I don't trade like 1% or 2% of my account or something like this. It's more on hard stops or the feeling as well. But it's so many times that I've been down like $1,000 until the last 2 hours of the day, and then I take everything back and I go out with $300 plus. And that's something I would never do in the past, because I would just accept that loss and not trade anymore.
Oh, Henrik, can you give the people an example what has happened when I have maybe $1,000 loss or $2,000 loss or $3,000 loss? What I will do?
But that's what you need to trade good. We all know that you need to be on the losing side to put.
Yeah. So what I always do?
You always add to your losses, and you add very, very aggressively.
And so, then I bring it back.
Then you bring it back.
99% I bring it back, and I come back with a big fat win. But 1% is, oh man, I find myself in a very big bad ass position. But 99%, when I have $3,000 loss, I come back with $20,000 profit, because my position is so big.
There's so many times I've asked you. I remember that. There's so many times I've asked you, because we've been trading and you're like down $5,000 or something, and then suddenly you say, "Bam! I'm $7,000 plus." And I thought, what the fuck happened now? Then I know that you went in with 30 NQs and you on a losing position, and you took it back.
This is maybe your question. So have we some risk management? So I think the risk management is good. I love to have risk management, but at the end, when you are a full-time trader and you trade maybe the whole market session, then it's really hard to don't take a trade. So Tessa is asking, is going through the funded route recommended for all traders? I ask this because some people don't agree. Henrik.
Yeah, I would say it is. It is recommended. I recommend it because there's a few reasons, but I think one of the reasons is actually the rules, that they have slightly different rules from what you're maybe you have on your own account. And I think it's good to experience those rules and to really try to abide by them, because if you think long term that perhaps you want to trade for other people in a few years from now or something, then I think that if you have been trading for a prop firm and you manage to stay with that prop firm and to abide by the rules, then this is like a good thing to have in your CV in a way. But I would also say, when it comes to the money, when it comes to the trading with money, losing, my biggest loss, allowable loss I had per trade in my own account was $200. That was maximum what I allowed myself to lose in one trade. And for that money, I can actually buy 10 evaluation accounts. So if I'm not really a consistently profitable trader that can for sure make money using my own funds, then I think I'd rather spend $200 on 10 evaluation accounts to learn trading instead of losing my own money in the process. That's one thing. So that's why I would recommend to anyone who is struggling, save your own money, keep them on the side, buy a few evaluation accounts, and see this as losing your money, maybe. I don't know.
Yeah, and also, I have also a personal view on it. When people get not agree with to get funded, I can say that these people would not agree to get funded. They have enough buying power. So they can give a shit about this. So they can trade maybe with 100K, they can trade with 200K, they can trade with 300Ks. But if you're an average trader, a beginner trader, developer trader, maybe you have only 10K, 20K. If something is good, you have maybe 50K. So you have not so much buying power. You cannot trade like a pro. And you can have big losses. You can lose $500 each day. You can lose $1,000 each day. But with a prop firm, you have the buying power. You can play the like a pro. So you can have maybe 300K buying power. You can have 1 million buying power, and you can lose more. So you can lose 5,000, 7,000, 10,000 US dollars. And this gives you more comfortable in your trades, especially when you develop some trading strategies. And also, if you lose maybe 250 US dollars on your private account, you can buy maybe 10 evaluations accounts. So step by step by step. So you don't have to lose your own money. Take this as investment, maybe put 300 US dollars on the side and take the challenges from the prop firms. So if you have not the ability to have 100K, 500K, 1 million, then I will recommend it for everyone, for every trader. And my personal view of this is, in 10 years, we have no retail traders. We call it prop traders. Now we call it retail traders. But in the future, we will call retail traders prop traders. And we have the professional world, we have the prop firm world, and we have the big banks. But we have no more retail traders. This is my point of view. So I had a question from Eurasimo. When your position is losing, you added more lots? Yeah. So my strategy is, I hate to lose money. I cannot lose money because I talk about this with Henrik before often. So your first mentor, your first teacher in the trading world is always in your mind, and you cannot change it. What this guy teach you, it's always in your mind. And my first teaching from my early mentor was the casino rule. So the casino rule, I can explain it for you. The casino rule was, you go to the casino, you lose 100 US dollars. Fine. Then you put 200 US dollars, you lose 200 US dollars. You put in 300 US dollars, you lose 300 US dollars. Then you put in 500 US dollars, you lose this. Then you put in 1,000 US dollars, and you get back 5,000 US dollars. One point, you get the winners on your side. It's only the question and how long it takes. And this is in my mind always. Always when I have losers, this means for me, hey, maybe now I'm in a losing position, but when I add, and I'm really good in adding in my losers, then I become more profitable. So I add always to my losing position. This is one of my key strategy, adding to my losing position sometimes. But when I see that this makes really not sense because the market goes against me completely wild, or I don't know, something is completely going wrong with my trades, then I get out because it makes no sense. Otherwise, I have a big fat loss. And the biggest challenge with adding to a losing position, in my view, is to add wisely to your losing position. Don't be too fast. And it's also the beginning of your position. Give you an example. So when you have maybe only as maximum buying power 30 NQs, and you start with 5 NQs, then you're in a big fat position. Then you must add 5 again to get the half average price. After then you have 10. So then you must add 10 NQs that you can halve the average price. But after this, you have no change to come back from your losers. So when you add to a losing point, it's always the point where you start your trading. If you start with 1 NQ and then you add 2 NQs, and then you have 3, then you add again 3, then you have 6, from 6 to 12, from 12 to 24, something like this, then this is a good strategy. It's always how you start your trading, and then make a decision if it is valuable to add to losers. How many ticks are you far away to get and profit, and all the stuff. So sometimes it's not easy to say add to losing trade. They give many points of view how you can play this really safe. I hope this makes sense.
I think this is interesting, Patrick, also because you're adding to your losers, and I have tried to do that as well, and I cannot manage it really well. I took back some money, but I also blew some accounts due to it. But I add to my winners, and that's something we have been discussing, that you don't like to add to your winners.
Yeah, I lose always when I add to my winners.
You add to your winners, right?
Yeah, 100%.
Yeah. So I think then we are back to my first person that I listened to when I started trading. He was always adding to his winners, and I kind of found that I implemented it as a natural part of my trading, so to speak. So for me, it's kind of natural to do it.
Yeah, it's always the first person where you listen to, maybe on YouTube, on a podcast, or something like this. Every first person, this brand your mind so hard. And for every new trader, this is a big fat advice. Take your mentors or your gurus or what you watch to YouTube very wisely. Don't follow any stupid bullshit gamblers, traders, I don't know, because it's with brain in your mind so hard, and you cannot fix it. You cannot fix it. It's always in your mind. Yeah. So Murat was asking me, how much % would you let a trade lose until you exit? Murat, this is not a good question. So yeah, please come on, Murat. Come on to the camera. I have no %, because when I have a rule, you think to have a rule, to have a % when it's bad and when it's not. For me, I have no rules like this. For me, it's always I watch the market. When the market gives me the opportunity that I can add to my losing position, then I will do this. But when the market punch me in the face, like what I say to the beginning, everybody have a plan until you get the punch in the face, then I get out. And no matter what, how many % it is. When I see it goes completely wild and I have no change to come out, is because maybe you think in %, I think in ticks. How many ticks are far away from my break even? So when maybe you trade the MNQs or NQs or something like this, if you may be far away like 60 ticks or 70 ticks, it makes no sense anymore to add to your losing position, because the average is too bad. And when it against you again and the market goes crazy and maybe you're short and it goes up again, then it goes so fast that you have a big fat position and you blow your account. And in this case, I have no % rule. What I do, I watch the ticks, how many ticks are far away from my break even, and I watch the market condition. Is the market goes completely in my direction? Is the market goes wide? Was there any news? I watched the level 2. I watched the resistance from QQQ, from the SPY. If there's something what I can see, and when something make no sense, then I'm get out immediately. I give a shit about persons.
Yeah, no, I agree with that explanation. I just want a reference for myself. Let's say, I don't know if you put stop loss, if you don't put stop loss. It seems like you don't.
I don't.
When would you add? Let's say you think it's going to reverse. How much in loss would you start adding? Like, how much would you let your trade sit?
Yeah, I can give you some insight what Henrik and I was thinking about. So we was thinking many times about this, when it's a good time to add to your losing position and when it's not a good time. A good time is it when your ticks is maybe 40 or 50 points, under 40 or 50 points. Then it's maybe a good decision to add to a losing position. When the market condition goes to your side because you have a resistance and now it comes back down or something like this. But when you're over 50 ticks or maybe over 40 ticks, then it's make no sense to add to your losing position. Then it's too late. And this is why I can give everyone the advice. If you're some guy who add to your losing positions, you must have always in the mind what is my max position size, and then break it down to your first position size. So start maybe you have the max position size is 10 MNQs, 10 NQs. Start with 1, then add 1 again, then you have 2, then you halve your ticks. Maybe you're 30 ticks away, boom, you add 1 NQ, then you're only 15 ticks away. Maybe it's possible that you get break even or you make profit and then you make really good profit because you have a really good average price. Then you'll find yourself in a big profit position. And then maybe you're on the 15 and it goes back to 27 ticks. And you see maybe now it's a good time to add again. Then you add 2 NQs because you want half your tick size. Then you have 4 NQs. And then it comes to be a little bit dangerous. With 4 NQs, now when you see your doom or your P&L, now it goes really fast. Now you must be having strong mind because now your P&L is rising and you see your losses very quickly or you see your profit very quickly. And then it's a good point for you to know, make it sense again to add to my losing position or I'm going out. Because now it makes no sense again, because I have a big position. 4 NQs is maybe a big position. But when you see the resistance, it's maybe only 10 ticks away, then add again 4. Then you have 8 NQs. But if you go 30 ticks far away, go out of your position. Take your ass out of it makes no sense anymore. Mm-hmm. And I don't want to say to you, go out with 2, go out with 2, go out with 2. Go out with every position that you have. Close it directly. Go flat directly. Because it makes no sense anymore. Take the losses. But be careful when you start. Start with, if you really the person, what I say, if you start really, you're adding to losing, it's your strategy, one of your strategy. Start very, very small. That you have the good points to average your prices. Very, very smart. Mm-hmm. This is the biggest point. Many traders make it completely wrong. They start maybe with 2 NQs, and then they add to your positions. But you're directly in a bad ass position because to average your price to half, you must add 2. Then you're on 4, and after the 4, you have only 1 shot left. Then you're on 8, and then you cannot add anymore. When you have only 10 NQs as a power. So if you start 1, you can go to 2, you can go to 4, you can go to 8. You have more possible positions to add your losers. So maybe you must make a calculation for yourself. If you're a stock trader, a forex trader, futures trader, or someone else, how much can I add to my position before it becomes really bad? Yeah.
Thanks for answering. I asked because it's very different from my trading style, so I wanted to kind of learn more about this approach.
Yeah, but when you ask me about adding to a winning, I'm not the one to adding to winning. I cannot add to winners, so every time I fuck completely up. My style is more like adding to losers. I don't know why, but yeah, my first mentor was teaching me the story from the casinos and why billionaires cannot trade in the cannot go into the casinos because they will win every time. They have so much power. And this is my rule on the adding to the losing position. Make it so smart that you have enough power that you get the point where you get profitable. Mm-hmm. And most people who are adding to the losing position, they lose because they add too fast or they add too big or something like this. They have not smart strategy. Okay, so Henrik, we have now the last point of today. What are the 3 biggest lessons Henrik learned doing his mentorship with Patrick? Oh, let's go.
I think my single biggest lesson was to not accept to lose money. That is something that I really take with me, and that I have changed. So yeah.
Tell the story about this. when I kick your ass. It was in the early stage, yeah.
Yeah. That was one of the first days or first week. I don't know. I don't remember exactly, but you were saying like, why the fuck do you give back your money? Something like this. And, even a lost profit is lost money, because I had a tendency to go up, like, I don't know, 20 points or something like this. And then it came back on me and I was suddenly down 15 points. And you say, you idiot, you're stupid, something like this. Yeah. Why do you give back your money? And that really started to make me think. And I can only say that trading like this, with someone who's been doing it for so many years, and to be that intimate as we have been with our discussions and trading, has made me look at many things very differently, because I think that it's so easy to get stuck in this in the trading environment where you're talking about, accepting your losers and be okay with losing money, or be okay with the process taking time and all of these things. But I was I'm here for one reason. I want to make money, and I want to make money as fast as I can, and I want to get rid of my other job, and I cannot wait one more day to do it. And the only way to do that, in my opinion, at least for myself, is to really dig into, I don't know how to explain it, but to trade for the money. Just trade for the money. Make sure that you get money on your account. That's it. That's the only thing you have to do.
Yeah.
Yeah. Go ahead, Patrick.
I remember on 2 things. I think the first time when I was kicking your ass was when I was your IP in the TAP program, and you say, "Yeah, I'm happy. I lose only $10 for the week," and I think you get a big private message from me over the chat with traders, and I say, "How you can be happy to lose money? What motherfucker you are?"
Yeah, but that was the turning point for me. That was the turning point. I was asking myself, first of all, yeah, I was a little bit, what the fuck is this? What's he saying? Like, then I started to think, yeah, he's right. Why should I accept to lose money? That's not right. I'm here to make money, not to lose them. So that I can just say that was a turning point for me. And it doesn't matter what I do otherwise. I mean, I think we should all strive to be a better person and to live healthy and all these things. But at the end of the day, what really matters is if you make money or not. Nothing else.
Yeah. And the second point where I was remember, I don't know if this was the early stage also, but I was telling you the story about retail traders and professional traders. So retail traders get completely unlucky, frustrated when they take losses. Yeah, so they get completely pissed off. But they are happy when they make, when the stock was maybe on $500, it was $500 in profit, and they came out with maybe $250 or $200, and they get so happy. Woo! I make $200. Woo! I'm the king. You remember? And then I told you, man, they are completely so what for stupid people? They are happy that they lose $300.
Yeah.
Because it's completely stupid. Man, they was on $500 and losing $300 and they are happy. Completely bullshit.
Yeah.
And this is why it's so important to, when you have profit, take the profit. Man, you have you cannot say, if you get a strong pullback and you lose your profit, or or maybe you find your ass in a losing position. But when you have the profit, it's on your bank account, and you will find always a good point to enter again in the market. But you have your profit in your bank account.
Yeah, and that is the second lesson, I think, that you can always enter again. And I was always worried about the spreads or the fees, again, the fees, and on the CFDs, it was the spreads. That, okay, if I enter again, then I will lose so and so many points or whatever by entering again and not holding this position. But I would say, looking, hindsight, then I actually make more money now by just taking the profits when they are given to me, and then being very alert to just go in again if the market shows that it wants to continue. So definitely this is the second lesson. The third one, I'm not sure. What do you think, Patrick?
The third one, I think the third one was the tools. You feel naked when you have not the level 2 data or when you have the news.
Definitely.
So this was one big impact on you, and how to read correctly the level 2, how to read correctly the time and sales data.
Yeah.
So how to read correctly the option flow data. I remember when I show you the option flow data, your mind was completely blowing. So I was talking to you, hey man, look at this big option order and watch the chart, what was happened. And you remember, completely mind blowing. So you were seeing how this will work. So, and this was I think this was a big, great impact. And the last big, great impact was the news. So how important it is to have good news so that you can now have an idea, can I go short now? Is this news really good or not? Or can I go long?
Yeah, that's right. That's the third lesson, to use those tools for sure. And right now it's become like, I don't think I even think about it, the time and sales, I just see it flickering. And when I see it flickering in a different way than it was before, then I think, okay, shit, something is happening. Maybe I need to get out, So
100%.
Yeah.
Okay. So, ladies and gentlemen, Henrik, speak to your audience. I must go for 1 minute to washing.
Yeah, that's a saying we have, because when you need to go to the bathroom, we say that we need to go to Washington, because that's something that Steve said, and we couldn't make out what he said because we are not native English speakers. So we say, if we need to go for a piss, then we go for a piss, and if we need to go for a shit, then we say we need to go for a shit. We don't say that we need to go to the washer, but this is what what Steve said, and we said, what's he saying? You need to go to Washington? What's that? So that's what Patrick is doing now, taking a trip to Washington. In the meantime, while I'm here alone, I don't like to be alone, but still, if somebody has any questions, then go ahead.
I guess I have another question. I think it's really cool that you guys worked so closely together for such a long time, and being new in this community, is that something that's quite common, or did that happen organically, or did you reach out to Patrick, or how did it start?
I don't know. It's as I said in the beginning, he was my accountability partner from the start. Yeah, and I guess we just started to communicate a little bit more than what is required, perhaps, from an accountability partner. I guess we are different in some ways, but we are also much alike, I think, in other ways. So we kind of found a common ground to discuss from. And then I don't remember how it happened, but I think when we started trading together, it was more like Patrick said to me that, come on, you need to show your chart so that I'm not bullshitting him, that I can say whatever I want to say when I'm reporting to him. I can say that, okay, today I made X amount of dollars and I took 10 winners and I had 2 losers. And he was like, come on, show it to me. Show me the chart. So then we started to trade, over Zoom. And I had my chart on live, for him to see. And then sometimes when I took a trade, and I had the markers on the chart as well. So as soon as I take a trade, there will be a mark. I trade with Ninja Trader, so you have this arrow, and he would just tell me, that's stupid to take that trade. You know, what the fuck did you do? And then I'm like, oh sorry. Yeah. So that is accountability. That is real accountability.
Excuse the last interruption here. This is Tessa. We hope you're enjoying this episode so far. If you love the podcast, please give Chat with Traders the best review you can on whatever platform you're listening from. This will help us to keep the episodes coming. Also, if you haven't subscribed to our email list, please hop on to chatwithtraders.com and click on subscribe so we can keep you posted of information that may be of importance. Thank you. Now back to the chat with our guest.
For sure. And then it just kept on, you know. We just made it a habit.
Yeah, and we trade now every day together. So yeah, and Washington is washroom. Yeah. So,
yeah, I explained the story to the guys. Yeah.
Okay, nice.
I think us northern people, the Scandinavians or whatever, the Europeans, maybe we're not so sensitive. So we just say when we need to go for a shit, then we say it. Yeah.
Yeah. And I missed the point. So fuck. I was thinking another good point what we have learned together is when you work together with someone, it's not important the money. If you spend money for mentorship or something like this, it's more important how much value you can give each other. So when I work with Henrik, so we give us together really great value. So we share together many things. So he was sharing with me his insights from his backtesting. I learned something about him because he's an engineer. He has a completely other mindset. And I share something with him. So what I was told you, it's always how you can give value for other people. If you chose, maybe you are in a tab program and you have an AP, it's really important that both together have value. So it's, you are the accountability partner, but at the end, it's good to have value. And me and Henrik, maybe it was a fantastic match, but what the biggest learning is for myself, it's the value what you can give each other. So, and I would say the value what Henrik and me is giving is 50-50. So I learn also many things from Henrik. But I think the biggest lesson is you need someone who's guiding you. You need someone who's professional. So what I will mean with this, so if you have some partner who is on the same level like you or a little bit above you, he have not so great impact. He cannot guide you really hard. So I'm 16 years in the market. Henrik is maybe 2 years, 1 year, 3 years, I don't know. But I have the impact of him that I can guide him. I can show him the way, how we can go to the funded level. I can motivate him. I can show him the way. So I think the biggest lesson is you need some professional. You need some professional who guide you through the process. Maybe I'm wrong, Henrik, but
no, absolutely agree.
I think this is the number one.
Absolutely, and it's so pushing me. It's pushing me forward when I see someone who I can, in a way, identify with on a private level. I see that person making the kind of money that I want to make, which is my goal, and I can see how he's doing. How he's. I cannot see maybe how he's doing everything, but I can see the process in a way, what he's doing during the day. This gives me a completely different perspective, I would say. And that is a kind of perspective that during these 2 months that we've been trading for the prop firm challenge together, these 2 months I think have given me as much as I've been given from whatever I've been doing before for 8 months or even a year. So this means everything, and I think I would recommend anyone, even if they are not as lucky as I was, to find the right accountability partner at the very start and to connect with that person. Then I would rather pay for it. I mean, I would spend whatever $100 or $1,000 to get someone who is really doing this for a living to show me his ins and outs and what he's doing, for sure. 100%. And that's what Patrick has been doing. And that's I'm really grateful for that. And besides that we have fun, then I think that I'm really privileged also to be trading with Patrick and that I can give him some value also. That is, I'm really happy if I can do that for sure. Right.
Yeah.
Yeah.
Okay. So, wow, 10 o'clock now, but
almost 2 hours.
Yeah, 2 hours. Nice. But we are now open for questions, so maybe we can have 10 minutes for the questions round. But they know they can make tons of money, but they know that they can lose money. But they know they can make tons of money, but they know that they can lose money. So it's and for my private account, I do the same strategy. This is why when you watch to the podcast,